Hi guys, I hope you're sharp, and then this is our second video for today. So I'm going to show you how to how to do an analysis on US30 and show you what to expect from it this week. So make sure that you stick with me throughout the end so that you can have an idea as to like where to look for trades and to look what kind of trades to look out for. So if you're new here, make sure that you subscribe and hit the bell icon, because this is where I share analysis of the market analysis and also trading tips and stuff like that. And there are those that I took in on a mentorship program. It's going to be for 2 months, and we started with a week now. So if you are interested, you just let me know so that you can join in the next group. All right, let's get started. So this is our US30, and as usual, we always start at the top. So this is our how US30 looks on monthly. So on monthly, what we need to take from this time frame is that we are inside one monthly support, right? Two old not all time, let's say old resistance becoming potential new support. We're talking about this was at some point the all-time high, and then the price reacted here, and then it eventually got broken, and then now we have a monthly support around it, which can mean that probably it's going to turn into the new support, but we will see about that. So from here we can say this is a buyer's territory. So for as long as these guys, the sellers, don't violate this level, the buyers still have a chance to go up and until at least there, which is more or less the same as like what we had on Nasdaq. So that's all that you need to take from this one there. So let's check our weekly. So on our weekly, we have more or less the same stuff we had on our Nasdaq. So this is our weekly bearish trend line and our weekly resistance, and then you can just go back here and just mark an area of support around there where the price is reacting. So it's up to you whether you want to use this, but you need to have, remember, you always need to have a zone above and a zone below, and you can't mark this one as yet because the price hasn't done anything. It's still playing around that, so it means you need to accommodate it by moving back, where you can, I don't know, you can decide to pick this. It's totally up to you, but around this, any valid zone, you can mark it as your zone below. So the most important thing here is gonna be, we know that on monthly everything is pointing to the upside, and the trend line is not yet broken. The only disadvantage is that we around the bearish trend line. But what we can take from this is that we once had a bullish engulfing, and last week we closed with bullish rejection, just like we having on Nasdaq. So now it's only a challenge to say that, is this thing gonna break the trend line and reach for that resistance, or is it gonna be rejected again? We don't know about that, but for now we are leaning towards the buyers, but we'll see. It's just that we are too close to this, so this might be very stubborn. As you can see, for the past 2 weeks we've been playing around it, so it's very stubborn. It might reject again, but we don't know about that. We will see. So let's check what is happening on daily. So on daily, if you remember what we said about Nasdaq, this moved like this, went up. So that's the trend line what we had when we were going down, and this was the low that initiated this move and did what, and broke the trend line. So it means this zone broke the trend line, but the resistance, the nearest resistance, was somewhere there. And then look what the market did after breaking the trend line. It paused here before taking off and breaking the resistance, which means this one here, the pause, is the one that broke the resistance. This one here, the swing low, is the one that broke the trend line. So meaning both these areas of support, they're important. One broke the trend line, the other one broke the area of resistance. So if the price touches one of them, you are more than welcome to look for trades, because they are both valid. So let's look what the price did. So the price came to this one for the first time. So it's just that the level has been tested many times before. So it was tested here, the price went up, came back again, second touch, third touch, and the more a level is tested, the weaker it gets. So here it's just that but just because it's been tested many times does not mean if it's weak it has to be broken. So until it is broken, it will remain active. So if, let's say, you can have a buy limit at a level that the price has never been to. If let's say it was coming for the first time here, you can put a buy limit. But as soon as the level has been tested before, you can't go with the buy limit. Now you're waiting for confirmation. So let's say here when you had this, you said that's my confirmation, and then you look for trades on smaller time frames. You know that we are still around the support, and we had the confirmation, which is the bullish rejection. I'm more than welcome to look for trades to go up. But even here's what you need to note here, which is interesting. When we came back, we turned somewhere around there, right? And then we went up, and then we came back and turned there, which is a lower low. So it means the price, when it was coming down, it had a short-term bearish momentum. So it gave us this trend line, which is a short-term trend line, because remember, it is not going to be a downtrend up until the day it violates the structures of the bullishness. Because remember, the bullishness started here and did this. The structure number 1 is this, and structure number 2 is this. So until it breaks maybe this, then the bears don't mean much. So now we can see the price is playing around. Remember, on weekly we had the same trend line. The price is playing around that, and on daily the price is playing around short-term bearish trend line, which means it's not a good sign. We said we are leaning towards the bulls on higher time, but that's on the highest time frame. Remember, the highest time frame, they can say we are going up, but when you go to smaller time frames, you find something else, which means maybe we're gonna have like pullbacks playing around before taking off to satisfy or to complete the move, or that we are seeing on the highest time frame. So here we can see we have a lot of resistance. So we are around the bearish short-term trend line, where you have your thing here. The price is still inside here. So if you are strong enough, and then this is your support on this time frame, resistance, support, and bearish trend line. So if the price was to give you maybe reasons to go short here, you can take your chances. Why? Because you know you're around this. So it means if you lose that trade, it will mean now the price has to break the short-term trend line and maybe take out the support, which means you can now have maybe look for demand or area of support to go and join them to the opposing weekly support, trend line, what's this, resistance. Remember, we had the weekly resistance around here. So should the price break that, then it will come, you will target that when you are buying. But for now, until it breaks these two, the bears are still gonna try and squeeze them down, even with what, their weekly trend line. This weekly trend line is also gonna try and squeeze them down to go back again, but we'll see about that. So that's all that you can say you are having on daily. So let's mark the short-term trend line, and also mark this area of support, the area above and the area below. That's what you need to do, because if you don't know where you are coming from, you won't know where you are going, meaning you won't know where to enter and where to exit. So that's why it's important for you to always mark your zone below and your zone above. It will make things easier for you to look for trades. And then the zone above is somewhere here. So that's your resistance and that's your support. So should the price give you any signs of weaknesses and reversal there, then you can take your chance. But be very strict with your stop losses. So now let's see. So this is the trend line that we had on daily, and now we are looking at H4. All right. On H4, let's see. When it was coming down, we had an area of resistance here. The price tried to react from it, and then it failed. But because we couldn't take this one, we couldn't take a sell here. Why? Because this is an area of support on this is from daily, right? So the price is coming from a daily support. We can't try and sell from H4 resistance to try and fight the daily support. Yes, the price says it can do this, but the odds are very low, which means we only want the trades that have got higher odds, so that we have better chances of winning. So that's why in such cases where the price is higher time frame fighting smaller time frames, stay out of trouble. So now when it is coming up inside this is the daily area of resistance that I said, anywhere around here, should it give you a resistance that it wants to pull back, maybe you can take that and target this. But if it doesn't give you anything, it means it's just gonna go up. Maybe you can look for, if it pulls back, you can now buy, because this guy won't be here, it will be broken. But until it is broken, it's very risky to buy now. judging from the location where we are, which is saying bearish. So until that bearish is taken out, we're not gonna buy as yet. But if it gives you reasons to go short, you know that your next opposing H4 support is here. That's if it gives you a reason to go short, maybe anywhere around here. If it gives you reasons to go short, you can take your chances too until here. Don't try and say it's gonna go all the way down. No, it's not gonna do that. It can, yes, Mara. You don't have to try and predict that. Target the next opposing structure, take the profit, move to the next trade. You see, you don't have to fight the markets. You don't have to fight the markets. So let's see what's happening on lastly the H1. On remember, this was just price action on Friday, and I always say Fridays, especially Fridays at night, you can't open trade Friday around this time. Why? Because the markets are about to close. You don't know what's going to happen over the weekend. The market can just come back with a huge gap on Monday. So to stay safe, don't try and trade. Don't trade at night. And usually the what you call this, the momentum is very small. So volatility is very small around this time. So you need to be careful. Should it give you a reasons to go short, you'll still be targeting around here. But another thing that I think I forgot to pick or to mention from this is that on H4 we had this, came back, went up, which is a higher high. Then H4 trend line is there, which now makes it tricky for you to target this. Why? Because it's too far. So should you get your reason to go in, it means around this, the trend line, you are out. You don't want obstacles on your way. So at the next obstacle, go out or move to break even. At least that's the least that you can do. But you can't just watch the price moves down and then you say it has to break the trend line, and then you watch it come up, and then you're not doing anything. Because if it goes up, it means this was just for nothing. You saw this, it was there was profit, you did nothing, you didn't manage your trade well, then you end up losing that trade. So here you need to be very careful. So it's up to you if you get a reason to go short, and then once you get to the trend line, do something, close half or move to break even. But don't just watch the trade, because should the trend line hold again, should it hold, then you just see your profit just fading away right in front of your eyes. So that's what you can look out for on this one. So if you had reasons to go long here, you know you are inside your daily support and blah blah blah, then you will have all the reasons to go short. If you get a reason to, so like if you wanted to execute there, at least you know the bigger time frames are pointing in your direction. But for now, because this is a daily opposing structure and daily trend line, just wait there. Should it give you a reason to, maybe it wants to breathe before taking off, you are more than welcome to try and catch that, but be very strict with your stop loss. All right, I'm gonna end it here, guys, and then I'll see you in the next one. Maybe next I can do VIX 75, and then should I do gold? I will see about that, but I'll see you in the next one, guys. Don't forget to like and subscribe.